Hey, it's Michael Saul, but everybody calls me Tiny. This video is back at the 200-day plus a couple of stocks to watch. This is stock market analysis for the week of December 3rd, 2018. If you would like to receive intra-week updates, go to www.attackthemarkets.com, put in your first name, your best email address, follow the directions, and you will be on the intra-week distribution list. Facebook group is at facebook.com/groups/attackthemarkets. If you like what you're hearing on this video, give me a thumbs up, leave a comment, and if you never want to miss a video when one is uploaded, hit the subscribe button and smash that bell, and you'll be notified when I upload a new video. Okay, so let's take a look at the market. So last week, we had pretty much a straight-up week. There were a couple of narrow-range candles in there, but we had a really big day on a really big day. Sound like Ed Sullivan there. No, I really don't, but I don't know. Anyway, on Wednesday, and then Thursday we had the spinning top, which is usually par for the course after an expansion day. Then Friday we tried to push through the 200-day, but we couldn't close above it. So, are we out of the woods yet? Are we just going straight up to new highs? Well, I am not convinced we are just yet. If we take out this double top right here, okay, then I am looking at a target of new highs by the end of the year. So it's pretty simple, okay? This double top, if it gets taken out, and I don't mean intraday, I mean we take it out and we close there, I'll be looking for the first pause / continuation pattern / small little pullback for a buying opportunity to see if we can challenge the highs. If we don't and we turn from here, I think there's a shot that we go to new lows on the year. So we're kind of sitting right in the middle here, right? We got 275. We got about 20 points up. Yeah, it's a little farther to go to new lows than it is to new highs. But we also tend to take the staircase up and the elevator down, right, or the escalator down. So we tend to have big candles on the way down as volatility increases, range increases, etc. So just because it's a few point difference doesn't mean we can't get there in the same amount of time. Right now, I would say we are more neutral than anything. I was thinking we were going to take out the October lows once we broke this triangle, but the fact that we're back inside the triangle gets me to back off a little bit. Yep, I'm on the fence, and that's the way it is, and that's the way it is most of the time in the market. Love these people that make big, strong guesses at where we're going, and then we don't go there, and then you just never hear about it anymore. To me, I would rather wait and see. One of the rules, the tried and true rules of trading that most don't follow is people are so stuck on looking for the next pullback or looking for the next directional signal, when if you look for volatility to contract, it is much more predictable that volatility will expand. Much more predictable. It always has. Could that stop happening? Sure. Anything is possible. But as long as the market is continued to be traded by humans, yes, I know, algorithmic trading, but guess who programs those computers, right? So anyway, as long as it's continuing, there's continued human influence, the market will more than likely, I cannot say definitely, but will more than likely continue to trade in a breathe in, breathe out style with volatility. So to me, rather than watching for, is this pullback going to be the one, or what, I would be watching for volatility contraction, which has always led to expansion. All right, so that's the S&P 500. Here is the Dow above the 200, but into the 50. Here's the Russell, lagging a little bit, came back into the triangle, but you can see below the 50 and the 200-day. That's something to pay attention to. Here's the NASDAQ, which only pierced the 78.6% retracement intraday, did not close there. Got the nice bounce. We're watching the 200-day and the 50-day moving average. How about the middies? The mid-caps has the 50-day moving average. You could kind of draw a triangle-ish here, too. See here, yep. Right, that's a nice triangle, so watching the mid-caps to see which way they're going to go. All right, let's look at some of the sectors. There's the semiconductors, which got off its butt after it pushed down out of the triangle. It's now coming out the other way. Watch the 50-day moving average, though. Here's KLA Tanker still forming this channel. Here's NVIDIA. In my opinion, I'd be watching this for a short side entry if we get back to the 20 EMA and fail there. How about Intel? Yeah, Intel's still stuck between the 50 and the 200-day moving average. Here's the banks. So the banks at the 50-day moving average. Here's Bank of America at the 50-day moving average. Basically, how if you wanted to trade the bank sector without trading the bank sector, like with options or with one of the holders or ETFs, Bank of America is a good surrogate for the banks. It moves pretty much in step with the banking index. Here's JP Morgan. Here's Citigroup. How about Northern Trust? Yeah, Northern Trust right at about the 50-day moving average. Here's Zion. Here's Goldman, which is technically a broker, but it acts like a bank. Really just not looking nice here, but it is a bit oversold, so I wouldn't be surprised if it were to get a bounce. Here's the broker-dealer index. I mean, you could draw some lines. It's more of a coil than anything. Here's Morgan, right below the 50-day moving average here. Here's Legg Mason, right below the 50-day moving average. How about the biotechs? Okay, the biotechs, you got the 50 and the 200-day moving average. Small double bottom here. Okay, let's look at some of the stocks there. Here's Biogen up above the 50-day moving average. See if that's going to continue. Here's Gilead into the 50-day moving average. Also have the 200-day right above. Here's Amgen popping up to new highs. And here's Immunogen. Look at this. Just, wow. Was such a nice looking flag. It got the target, which was new highs, and now it's just on the balls of its butt here, right? Just not looking nice over here. Let's look at some of the glamour stocks. Caterpillar at the 50-day moving average. John Deere showing better relative strength, but still sloppy, right? Still not looking like, hey, look at this. Let's run into John Deere here. Here's Amazon right into the 200-day moving average. See if this is going to turn, or this is going to put in a low W bottom. Maybe it takes out the 1800 and tries to rally. Here's Alphabet into the 50-day moving average. Watch the 200-day just above it. Here's Apple, right? So Apple pushed down. Now it has a small continuation pattern right here. Okay, so let's see if this is going to move from here. If this rolls over, breaks 170, you got 161 as the next target here for Apple. Netflix into the 20 EMA. Lots of talk about AT&T, I believe, is coming out with a streaming service, and you're hearing about Disney, so everybody's getting, oh no, Netflix is in trouble. Well, of course competition's going to come in, but for right now, Netflix got overheated, it's pulling back, and it's still okay, right? It's not in a buy signal right here, but I don't know if it's necessarily in a short signal just yet. Something to watch. Let's look at Disney, by the way. Full disclosure, my kids do own some Disney stock. They were given it when they were born by relatives and friends. More sloppy than anything, but you can see it came off the 120. If you look at the weekly chart, you can see this had the nice triangle here. It broke out. Now it's in another coil. Let's see if it could break out here. If it did take out the 120, that would be nice. Maybe head to 150. Again, I'm not looking to sell any on behalf of the kids or anything like that, so I'm not looking to, can't really pump and dump Disney either. They don't own enough shares. But just saying it does look okay here. Again, if the market gets weak, that's a different story, right? I don't think Disney's going to buck the trend, but it is looking okay. All right, so one of the two stocks that I wanted to look at today is Facebook. I know we usually look at that every week, but I just want to talk about our good friend Paul Schatz. He called the high up here. He said that's going to be the high for a while. Looks like he's right, and it's been in a downtrend, a short-term downtrend since gapping down here in July. Right now, it's back to the 20 EMA, and notice how the 20 EMA is held here, 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 here. Now, it pokes up a little bit above it, but it eventually turns. So I am watching Facebook for a potential short side opportunity. Don't have a trigger here, but if we do get a reversal candle or even a small little, maybe a tweezer top or something here, this is one to definitely watch. Then we have Polaris Industries. This is in a coil here. It's sloppy up top, but if it were to release to the downside, I'm actually looking for Polaris to test the April 2017 lows down here at 78. How about the bonds? So the bonds, small little sloppy coil here right above the 50-day moving average. If this were to release to the upside, watch the 200-day moving average. Remember, I pointed out the divergence, but I did talk about the 50-day perhaps being the first target. Looks like it's not, because we did get above it. So if bonds continue to bounce here, okay, that means rates would be going lower. That could have a positive a positive residual effect on stocks. So we're watching TLT here. Let's see if this would pop out. How about oil? So oil continues to get battered. USO I'm using as the surrogate. You got down here 1034, and then you got down here at 930s, and then you got here at 870s. We want to watch all those points for support. And then you got gold, which is just doing nothing. A lot of people calling the bottom in gold. I still don't see it. I mean, it's pretty simple for me, right? As long as we're under the 200-day moving average, I'm not really ready to call bottom in gold. Maybe we release from here. We are coming into a seasonal rally period for gold around the Chinese New Year and everything, so we want to pay attention to that. But if it were to break out here, you do have the 200-day moving average, which is possible resistance. All right, so let's recap. I think that we are right in the middle here. Yeah, I know it's a little bit further to go to new lows than it is to new highs, but like I said, we take the stairs up and the escalator or elevator down. Usually we get much bigger movements in a shorter period of time on the downside, so we could easily make that up here. We're right at the 200-day moving average. We're in wait-and-see mode. I would rather see what sets up over the next few days, but I am going to be watching if we do take out this small double top for the next pause / small pullbacks, whatever it is, for a potential buying opportunity. Questions, tiny@attackthemarkets.com. Don't forget to sign up for the free intra-week distribution list to stay updated on the comings and goings in the market. All right? That's it. I will talk to you in next week's video or in the intra-week updates.